Tommy Huie, who has more than 20 years experience in the industry and oversees $32 billion in assets at M&I Investment Management, he's a bit more optimistic. He thinks analysts should be upgrading their earnings estimates. Tommy joining us now from Milwaukee. Thank you so much for joining us. We appreciate it. So first of all, tell us, why do you think that analysts should be increasing their profit estimates right now?
Hi, Julie. Thanks for having me. Well, certainly there's plenty to worry about. Your previous guest articulated very well some of the elements on that big wall of worry: employment, housing, the issues in Europe, and so forth. And certainly there are some elements that will lead us into perhaps a slowing recovery, although I would agree that we don't have a double dip. But there are many companies out there on a selective basis that have done very well managing the downturn and riding up the recovery here. They've been able to increase revenues, generally kept their costs in line, maintain their profit margins, and as a result have really pulled off some very nice operating leverage.
Tommy,
and with that in mind, we think... Go ahead.
I was just going to say, how are these companies doing that when the economic data doesn't seem to back up that there's the economic activity to support it?
Sure. Well, certainly some corporate managements actually do a very good job in terms of managing their companies. In some cases, they have, particularly for U.S. multinationals, they have a very diversified client base or customer base, not only here in the U.S., but also around the world. They've been able to manage their staff very effectively and to be able to maintain their productivity. So I think those are the key elements for which some of the companies really have done a nice job, and that's really where our focus has been in looking for investments across our equity and really looking at the fixed income side in our Marshall Funds complex.
So what are these companies that are doing well? Are there particular sectors that you think where you're seeing some better management practices and where the profits are going to look better?
Well, certainly a few sectors that we've been overweighted in some of our portfolios: large cap value, large cap growth, as well as core equities, have been in the energy, materials, and industrials sectors. Been a little bit lighter weighted with respect to the consumer sectors. One of our favorites in the Marshall Large Cap Value Fund is Ford, which has done a very good job in terms of increasing sales, particularly with their highly profitable truck segment. And they have really brought down some of the expenses, particularly with respect to sales incentives. In the Marshall Large Cap Growth Fund, Visa is a favorite. It's actually done very good in terms of capturing some of the rebound in consumer spending, and so their revenues have increased as well. So those are some of the areas, but really on a broad basis, looking at high-quality companies, particularly those with a multinational presence. They've been able to keep their debt levels down, maintain reasonable growth rates, and really manage through the downturn and hopefully the recovery here as we continue to progress throughout the summer.
Tommy, just quickly here, I'm just looking at Visa in particular. The shares are down 17% this year. So are you concerned at all in some of these cases that even if you've got a good profit growth story, that investors are still not going to reward the stock?
Well, certainly over the very short term, uncertainty and volatility are going to influence the broad set of investors, both institutional as well as individual. That's why on a medium to long term basis, we're really more bullish. Certainly valuations on equities are quite reasonable at these levels. One can make an argument that, well, maybe the earnings should be a little bit lower heading into what some might believe would be a double dip, although again, I'd stress we're not in that camp. But even if earnings were disappointed a little bit, valuations are fairly attractive. So on a medium to long-term basis, we're good.
All right. Sorry, Tommy, we're out of time. Tommy Huie, President and CIO of M&I Investment Management.